Alrighty, we'll go ahead and get started. Good afternoon, and on behalf of the National Glass Association, my name is Alicia Mitchell, and I am the Senior Operations Manager. Thank you for joining us for today's Thirsty Thursday webinar, featuring NGA's very own Katy Devlin. Today, Katy will be taking a deep dive into key economic and glass fenestration industry metrics that help paint a picture of the construction environment today and in the future. There will be a live Q&A at the end of the presentation today, so feel free to enter your questions into the Q&A chat feature, which is located at the bottom of your Zoom screen. Before we get started, I would like to call everyone's attention to our upcoming events. Next up, we have NGA's Glass Conference, Ann Arbor, September 29th through October 2nd. We have Glass Build America in Orlando, Florida this year, November 4th through the 6th. And we're starting to dip into 2026 already with BEC Conference in Louisville, Kentucky, March 1st through the 3rd. You can find out more about each of these events on glass.org/events. I hope to see you all there. Lastly, I would like to remind everyone that a recording of this webinar will be available on glass.org/webinars and sent to your emails by the end of the day, Friday. With that said, take it away, Katy.
Thank you so much, Alicia. Thank you all for being here for this May Thirsty Thursday. Again, I'm Katy Devlin, the Vice President of Content and Programming at the National Glass Association. Before I even get started, I'll let you know I'm not a professional economist, nor am I a professional prognosticator, but I am someone who's been in this industry at the NGA for now 20 plus years. Part of my role here on the content and programming team, I've been at Glass Magazine, which is our flagship publication for the architectural glass industry, and I've worked with Window and Door Magazine, our publication for the residential fenestration audience throughout this time. And as part of that, I have been a sort of professional tracker of what folks in our industry, what our readers, what our members need to know about this broader economy, the construction market, all surrounding it. So that's sort of where we are as we start looking at all of these numbers, these data points. You all are out there running your businesses. You are on job sites. You are in your manufacturing facilities, and it is tough to keep track of all the data points that are coming down. So this presentation pulls all of that together. If you've heard me give this presentation before, good news is all the numbers are new, so you will be getting a new version of it, though the outline is pretty familiar. And because there are so many data points, so many different sources for these statistics, please do refer to the resources. You'll all be getting a copy of this presentation, or you already have maybe in the email that came out before. In the notes, I have complete links to all of these sources, so you can easily get to it. We will be taking questions at the end. I will do my best to answer them here. If I can't answer them in this presentation, I'll certainly look into whatever the question is and get back to you. And if you do have anything that comes up after, my email is right there, and I would love to hear from you. All right, so without further ado, let's dive into the actual presentation. Here's the flow. We'll start out with some trade policy, a look at the broader U.S. economy, go into jobs, immigration, and then we'll narrow our focus looking at our construction industry, the construction spending, construction starts, the forecast indices that I look at, some industry-specific trends. So when we finally get there, we'll be narrowing even further, looking at our glass industry. And then I'll close out with just a few other things that we're watching, some things in the news from recent weeks that we at the NGA are keeping a closer eye on. So let's start with trade policy. If I had given this presentation a year ago, I wouldn't have started with the slide, but obviously, this has been the biggest impact of the administration. Trade policy is clearly the Trump administration's preferred lever for making policy, for negotiating. During our glass conference, we heard from some of our partners at K&L Gates, which is the firm we collaborate with in Washington, D.C., and they had their trade biggest trade policy moves that we've seen since the administration began. Right now, we sit with about a 10% blanket duty on goods from most trading partners. In April, I'm sure you all heard and sort of saw in the news the big response to the announcement of a 145% tariff on China, who is the US's largest trading partner. Those tariffs have since been reduced to 30% on May 12th. But obviously, the conversation keeps going. And this is something that we are tracking. And I'm sure you all are looking at in your businesses, where you're getting your materials, where you're getting your equipment. In terms of the potential impacts, so what we see on the right here is just a poll of 300 economists, and this poll was taken in April. So that was when we had the announcement of that 145% tariff on China. But the response of these 300 economists, folks are worried about how this will impact business sentiment, with 92% saying it could have a negative or very negative effect. Why is that? The biggest is fears of higher inflation, which could bring interest rates up, and it could also impact our GDP if they stay in place. Again, there are a lot of big ifs there, though, because we're not sure how many of these tariffs will end up staying in place long term. But even so, with all of the uncertainty, we saw 3/4 of economists who cut their global growth forecasts. The median now is 2.7% anticipated growth for the year. And we're also hearing, companies, individual companies that are reducing their own expectations. And that final bullet, I just pulled out a couple of specific companies from different sectors. So we've got Toyota and Ford in the auto side, both noting some pretty big reductions in their sales expectations. Apple as well. McDonald's announced that their Q1 sales had ticked down 3.7%, and UPS announced layoffs, 20,000 layoffs for the year. Another area that I look at with trade policy is the effect on supply chain. I actually started delivering this presentation back in 2022, in part to try to look at the data behind the supply chain, what we saw post-COVID, post-lockdown, when we had just a massive influx of orders, all of that pent-up demand. That snarled our supply chains for a year or more. And so as we look at just any big changes, potential changes in global shipping or in specifically imports to the U.S., I think supply chain is something we can and should really be keeping an eye on. So when those levies were raised in April to 145%, we saw cargo shipments plummet and costs went down with them. And I'll get into that in one of my later slides, just looking at the cost of shipping right now. But if we see, if we reach more and more trade deals and we're less worried about this, we could see another influx of demand. I don't think we'll experience anything like we did back when we had, several months of lockdown and a stoppage in a lot of those orders. But, something to watch, especially if you are getting materials from overseas. So here are just a note on the rates for shipping. We don't need to dig into it too much. The main theme is that prices have gone way down since that pandemic peak. So our pandemic peak was over $10,000 per 40-foot shipment. That's for the main global, that's the average across all different routes. Some routes saw shipments much higher. Gosh, I think I remember some companies saying they were paying almost $20,000 for shipments coming in to some East Coast ports. I also have a slide specifically of the Shanghai to LA rates, just to see if we could see in the data a reduction in a cost reduction in container rates for that route following those tariffs. And we did. The rates were down 58% from July to May. And anecdotally, I was chatting with somebody a few weeks ago who said, he works with a lot of companies, facilitates imports from around the world, including from China. And he said that in some ways, the effect of the tariff wasn't seen on the customers at that moment because the shipping container rate had gone down so dramatically. It was under $1,000, I think he said, at that moment to get one shipment in. So, right now they're down. We'll just see how things progress, but a good data point to look at if you're involved in any sort of imports. Uh, Finally, just as I am not a professional economist, I'm also not a professional trade expert by any means. But in having some conversations in the last few months, one area of trade that our industry can and should be looking at pretty closely is this petition from Vitro that came out in December. It's an anti-dumping and countervailing petition filed with the U.S. Department of Commerce and the U.S. International Trade Commission on float glass products from China and Malaysia. Now, we heard just last week or week before that the U.S. Department of Commerce had announced preliminary determinations in that countervailing suit, and that's what's on the screen right here. I've highlighted just the subsidies that were the duties that were instituted in that preliminary decision. I think we'll have to wait until I think June or even September to get the final determination on that, but for anyone working with those four companies that are noted there, that's an almost 900% increase in subsidy rates. But for all others, it's just over 11%. We are still waiting on the anti-dumping investigation. So, that's something that we'll be covering at Glass Magazine. I know Max Perelstein, he's been covering this on his blog as well. So certainly keep an eye on that. All right, next up, let's talk through GDP, US GDP. In Q1, we did see GDP shrink by 0.3%. This was the first decrease in GDP since Q1 2022. That was, thinking back to those supply chain slides, that was right when the economy was facing the post-lockdown supply chain difficulties. And this Q1 report comes on the heels of a fairly strong bit of growth in 2023 and 2024. I found this graphic from the New York Times to be really interesting, just thinking about, okay, so where does this number come from? And a big part of that lower GDP in Q1 is actually the surge of imports. So imports count against the GDP. And you can see in this chart just a huge bit. It seems like folks have been purchasing products ahead of these tariffs that they expected to come in. So those numbers were really high. And then we also saw government spending tick down a little bit. Another part of the GDP report that economists tend to look at is the consumer spending, since that is a very important metric about overall economic growth. And consumer spending did slow to 1.8% in the first quarter, down from 4% end of last year. For all the real GDP stat curious out there, I might recommend looking at the GDP Now. This is a forecast model from the Atlanta Federal Reserve. If you're really just curious about how the heck things are looking with the overall economy right now in this moment, based on all of the various data points that come in, check this out. It's a pretty sophisticated model. It's just an algorithm. They don't have any economists tweaking it or cleaning up the data. So you get a new bit of information about, like construction spending stats or whatever it might be, and that does feed into what the GDP Now forecast would be. So right now, based on all the data that the GDP Now has received thus far in the quarter, the minimum forecast for growth is 1.1%. The maximum forecast is 2.5%. But there's obviously some more time to come in the quarter and more data that will fill that out. But in this presentation, you'll definitely be able to get the link to that page. Inflation. Inflation, we've been watching this very closely since I started doing these reports. We had inflation in April at 2.3% year over year. That follows a reading of 2.4% in March. Looking, this chart does a really nice job of indicating what we were all feeling in those that post-pandemic time. So we're far down from that 6.6% in 2022, down from the 3.3% or 3.4% rate in 2023. But many economists say that these figures have yet to reflect any potential upward price pressure from tariffs. So, thus far in the year, most folks are saying that companies are still working through the inventories that they had prior to the institution of these additional duties. And we see that in announcements like from Walmart last week saying that, okay, now that we're refilling our inventory, we are going to have to adjust some of these prices. So as the May, June, July reports begin to come in, that's when we might see potential effects of the additional duties on inflation. This slide comes from AGC of America. So if you are, many of you are probably following AGC of America, but they have a very robust data compilation program. Ken Simonson is the chief economist over there, and he publishes a newsletter called Data Digest, and that is a great source for construction industry performance. So the slide here is just looking at construction material input costs. We've definitely seen some volatility in our material inputs over the years, which I'm sure you all experienced again very acutely in that post-pandemic, that post-lockdown time. But and from April to March, we didn't see really much change in construction material inputs, up just 1.3% year over year. However, if you're saying like, I don't know, costs feel pretty high, well, they're up 40% from February 2020. And that comes along with, up in that header of the chart, you see that wages have also been on the rise since that era, so up 4.6%. I did include in that fourth bullet point just a note from a recent Data Digest about a trade agreement that the Trump administration came to with the UK that included the removal of tariffs on steel and aluminum. That seems like one of the first, as Ken notes here, it's one of the first signs of tariff relief for construction materials specifically. I don't believe that there's a lot of import of those products coming to the US, but that could be a template for trade agreements elsewhere. And of course, inflation correlates very closely with interest rates. The Fed is they're watching the inflation rate to make determinations about the federal funds. And what you all probably heard this when the news came out, last week after last, that at their recent meeting, the Fed did hold the rate steady between 4.25 and 4.5. Rates are down a full point from mid-2004, but as we look at this longitudinal chart of interest rates, we can see that rates are higher than they've been. We've experienced an era of fairly low rates, particularly coming out of the Great Recession. Still nothing like the volatility of the 70s and 80s, but I know folks are really eager to see those rates come down. However, following that May meeting, Jerome Powell and some of the others working on the Fed, I think the head of the Atlanta Fed, they noted the challenge for the Federal Reserve right now in determining interest rates because of the uncertainty in the overall economy. So I quoted a piece from JP Morgan looking at this quandary that the Fed is in. If unemployment goes up, that could mean rate reductions. But if we see elevated inflation, it might require the opposite approach. So clearly they are doing a wait and see right now, and we'll see what happens throughout the summer. I won't spend too much time on this slide, but immigration policies have obviously been a very big priority for the Trump administration. We've seen an increase focus on border protection, immigration, increase in deportations, increase in ICE activity. And why does this, matter for our industry? Well, construction and manufacturing have pretty large segments of the workforce that are immigrants. So in construction, an estimated 26% of workers are immigrants, 13% of whom are not authorized to work in the US. And on the manufacturing side, we have 20% of workers who are immigrants, 5.4% who are not authorized to work in the US. Moving forward, while talking about people and the jobs market, I found this metric. So this has been part of this presentation since I started doing it back in 2022, and it seems like the jobs market. The common theme is that it has been defying expectations for kind of a long time. The U.S. Job market has just been pretty strong, and that continued. In April, the economy added 177,000 jobs. That was over the forecast of 138,000. We did see revisions, kind of a tick down from March and February. That's total jobs that were reduced for those 2 months. But nevertheless, the unemployment rate has remained steady at that 4.2%, and that's been the case for much of this year. That last bullet point is just looking at government employment. We've all seen the headlines about the massive reductions at the federal workforce, and I was curious as to how much of that had made its way into this data. And right now, we're only seeing 26,000 jobs since January. Obviously, the estimates we're seeing in the news are upwards of 200,000. But I think some of those jobs, many of them, it seems like they're still on payrolls till later in the year. So that's just something out of my own curiosity about the overall job market that I'll keep tracking. All right, let's move on to construction spending. So this is we're narrowing our focus to our industries. And construction spending, this data comes from the Census Bureau. We don't have the April numbers yet. That comes out in a couple of weeks. But for March, we saw a 0.5% fall from February. We're still up, though, 2.8% above March 2004. This chart is looking at just non-residential construction spending. So again, that sector also fell at 0.5% in March, but it was coming down from record high spending totals in February. If you are looking at the chart at the very far right, you can see that dip there and those record high numbers. As we dig into the data even further, we are seeing spending decreases month over month in 11 of the 16 non-residential categories. I'll look at that in the next slide in a table. And then here are some data points just from kind of more general categories. So private non-residential down, public non-residential down, residential also down. And here's that in table format. You can see of those 16 subcategories, the only 5 that saw growth, those are the ones in the black in that 1 month change column. And those are not necessarily categories where you might see a lot of glass and glazing. That's transport, public safety, conservation and development, water supply, amusement and recreation. Meanwhile, you scroll down and I highlighted just a few of the categories that I look at: educational, commercial, office, healthcare, just so we could see the month-to-month change there. One thing when I look at construction spending, and this has become increasingly important throughout the last couple of years, when what we are hearing from the industry is that office starts are down. That office market is really soft, but that was not coming across in the data. And that is in part because data center work is recorded in that office construction category. So it's really shielding us from seeing the full fall off in that kind of general office construction category. So at this slide, what we have, that blue line in the chart, that is total office spending. And the yellow line is general office. So if for those of you who are in the office market and have seen things soften, well, rightly so, because that segment is down 31.8% from March 2020 to March 2025. Meanwhile, data centers are up 265%. And that bullet point right up there, I mean, data center investment accounted for more than 70% of the increase in private non-residential construction between March 2024 and 25. That's wild. Now, of course, we can't assume that there's no glass in data centers, but many are, fairly windowless structures. I do know my colleague Tara Lukasik, who's one of the editors on Glass Magazine, she wrote a piece about glass in data center work. There are some data centers where they want them to look like traditional office, so you do see more traditional glazing scopes on that, at least on the exterior. But that's, not, it doesn't seem to be the case for the majority of those structures. So kind of a startling stat there, just the huge rise in data center building over the last few years. I also look at construction starts, which is a bit more of a forecast metric, more so than construction spending. And the difference is a little nuanced. So construction spending, that data from the census that we were just looking at, that measures the total amount of money spent on construction projects, while construction starts track the number of new projects that are initiated. So it's really kind of a leading indicator of future spending, but spending will be spread out over the duration. So construction starts, that saw a pretty big hit, that took a pretty big hit in April, down 9% in April, and fall offs in all of those categories, non-residential, residential, and a pretty huge decrease in non-building, though that doesn't necessarily impact our industry. And then here's just a quote from the chief economist over at Dodge Construction Network, who put this data together, just about how we are really starting to experience that slowdown in the non-residential market. All right, now let's move to the full forecast side. So I know a lot of you are tracking this. We'll look at data from the ABI, the Architectural Billings Index, from the American Institute of Architects, and we'll also look at data from the Dodge Momentum Index. That's from Dodge Construction Network. Starting off with the ABI. So ABI, that is it's a really simple index, really. They do a massive survey every month of architects and say, are your billings up or down? And the data they get from that gives us a forecast of about 9 months out of what we can expect to see. And as you can see on this chart on the right, things have been in the reds. Except for that 1 month, October 24, we have had a rough go of it. And if you expand it even further, you'll see a heck of a lot more red. That second bullet, their billings have declined 28 of the last 31 months since that post-pandemic boom. So the ABI has been forecasting a softer market for a long time. I think we are starting to see that in the spending and the starts as well. But the ABI isn't necessarily as optimistic about when we're going to come out of that. So we're all looking at that tail and hoping to see those numbers start to come around. The Dodge Momentum Index, this one rose just under a point in April. Commercial planning was up, institutional planning was up, but back to those pesky data centers, we have to consider the data without that line. So commercial would have actually fallen back 2.3% in April without data centers, and the entire Dodge Momentum Index would have been down 3% without data centers. So I'll close out by zeroing in on some glass industry data that we produce here at the National Glass Association in our Glass Magazine publication. So the first is Top 50 Glazers. This is an annual report in Glass Magazine that we've been publishing since 1992. I mean, what a gift to have longitudinal data for our industry going back that far. It's a pretty wonderful product, and I just am so appreciative to all of the glazers who continue to take the survey year after year. And this is a nice temperature check of trends in the industry as well as just industry performance. How are our glazers doing? The next report is coming out in July, August 2025. And so I do have some sneak peeks of general trends, but we'll have to wait for the precise data points. So what we're looking at here are the numbers from our 2024 report, which is actually looking at what the glazers were reporting on for the prior year. So it's a little bit old, but what we see is that in 2023, glazers were coming back, nearing that peak of gross sales at 4.2 billion. 64% in our 2024 report reported higher year-over-year sales. What are we seeing in this current report that we're running? That'll be out in just a couple of months. Well, fewer companies are reporting higher year-over-year sales. We did see a fall off there, and they're also reporting more competition for projects. Looking at segments, office buildings continue to reign supreme. Again, this is coming from our 2024 report. So even with the fall off in office construction, office spending that we saw in the earlier data, office buildings continue to be a big portion of our work, followed by multifamily, education, healthcare. Regions that had seen some growth, Southeast was leading the way. I believe that changes in 2025 in this most recent survey, but you'll have to see. You'll have to look at the magazine for those updated numbers. New construction continues to dominate, and then we also ask about delivery methods, just how our glazers are collaborating with the project teams. Glass Magazine also produces an annual report for the glass fabricator audience. This is our top glass fabricators report, a pretty massive survey there. And this was published just in April. So this is newer. Our fabricators looking back on their sales and trends in 2024. And we did see in this report a fall off in companies reporting higher year-over-year sales. So only 32% of reporting companies said they experienced higher sales in 2024 compared to 70% in the previous report. What were they worried about? Inflation, way up there. Also supply chain, logistics, can read the list there. Design trends, security glass and bird-friendly led the way, followed by energy-efficient glasses. And jumbo sizes continue to be a trend. And we had 83% of our respondents looking ahead, projecting that we will see even larger glass sizes. Finally, what else are we watching? So these are things that have very recently kind of come across our desks, and we are not sure how they will impact our industry, but we're keeping a very close eye. The first is Energy Star. The Trump administration, what was it, last week, maybe a week before, indicated it does plan to cut the Energy Star program. We are not sure, whether that will come to pass, but also if that will affect the Energy Star for Windows program. Currently, most of the coverage has been on the appliance side of things, but we're obviously taking a look at that. Tax credits. I saw this morning that the House did narrowly pass the big tax and spending bill. There are versions of that have included the elimination of tax credits for several energy efficient building products, including residential window tax credits and the solar energy tax credits. I don't know if the version that passed had that in there. We'll have to do some deep dives there. We have not seen anything yet about the commercial energy efficient tax credits, but we're obviously tracking that as well. And again, back to some, anti-dumping, countervailing duties. We will see some on the solar side for products imported from these 4 countries. Obviously, we have a lot of solar that's being manufactured increasingly here in the US. We've got floats that have turned that are specifically serving that market. So we're keeping an eye on that, though it is a bit of a side segment. So that concludes the big presentation of data. And I'm going to stop my share, get my camera back on. All right. And so sorry again about the surprise cutoff at the top. All right, so I'll look through some of these questions here.
Katie, I'm only seeing one question here in the Q&A box.
Uh, so again, I'm not a trade expert, but from what I understand, all of these tariffs on Chinese products are additional to what was there before. But I will look into that, and this is an anonymous attendee, but I will look into that. But that is my understanding. No other questions? All right. Well, please do not hesitate to reach out if anything does come up. If there are any other data points or metrics that you think we should be following, please let us know.
We do have two questions that just rolled in if you have a second.
Yes. There's a question that says, wouldn't we expect that if fabricator sales are down in 2023, that installers would be down as well? Yeah, so the fabricator side, we did see fewer fabricators reporting increased sales. We do have a fall off in glazers as well. We're seeing softening from that market as well. I just don't have the final number as to how much what the difference is from last year, but I do anticipate that as well. Mm. John Stevenson, yeah, thank you for being on this call. So John says, John's seeing a lot of tentative decisions due to the current uncertainty. Is there a way to advise owners regarding decision making? I am stumped. I would love I would love to hear an answer to that. Yeah. I think we are all facing a pretty big wall of uncertainty about what's going to happen with tariffs that affects pricing. Folks don't quite know. The tenor of the overall economy is one of uncertainty, and when folks are uncertain, they definitely pull back on those buying decisions. And for architects, they pull back, they see their owners start to pull back. So I'm curious if we'll start to see more projects being put on hold, paused, maybe even canceled. That happened back in 2008. I remember seeing a lot of news of that. So we will look, and in terms of advising owners, yeah, I will look into that, John, in terms of just understanding material price fluctuations and costs, and what can be communicated from groups that way. But that's a tricky one. Yeah, I'm sure you're not the only one asking that question. All right, Cameron Scripture, thanks for being on the call, Cameron. He notes that, what are my personal thoughts? What's my gut feeling on what we'll see in the next 12 months as far as the economy and the industry? Cameron, I am looking at the data the same way you all are, and for me, the ABI data is probably one of the most concerning indicators for us, because it is, if architects are not busy, then our industry is not busy. So until that ABI starts to turn around, I'm pretty trepidatious about what that means for our businesses. However, not all segments are affected the same. And so much of our work, I think there will be pockets of growth in, no matter the economy, you will find areas of growth. So whether that's renovation or institutional, I think we will find exciting opportunities there. Wow, all of these questions are coming in so quickly now. Thanks all. All of the projects means. We have a question here about the driving influence of impact products, severe weather, consumer safety, both. I think school security, building security is a big area here as well to consider when we talk about security products, but severe weather as well. You know, anytime there is a big storm that comes through, that is when those conversations happen about how we can protect. You know, buildings are built to protect people, and that's sort of the number one job. And our products are essential to that. So I think anytime there is a big event, we start to have an opportunity to talk about that. There's a question here about, do I see companies pivoting to different product options, reshoring, getting into new segments? This is a topic that came up. It comes up almost in every conversation I have. You know, where are you getting your product? And every single person I've talked to is just really looking at their supply chain. They're making, you know, they are checking on where they're getting their products. So I am absolutely seeing that in companies of all sizes, you know, whether you're in installing showers or working on multi-million-dollar scopes, glazing scopes. This is a comment from Jeff H. I wonder if that's Jeff Haber. But this respondent says, we have been isolating all tariff costs to clients, and they have been taking the responsibility for the cost. This way they know what the facade costs in current dollars with and without tariffs. That's a really good note, probably to the question above about how to communicate to owners. Yeah, thank you for that, Jeff. All right. Yeah, and I see this question about more, yes, thanks, Jeff. I see another question about detailed trends with architectural designs. Many architect friends are telling me work is slowing down a lot, and they're not using as much glass facades as they used to. Any insight on designs? Yeah, we should do a separate talk just looking at kind of design trends and see what we can present there, because I think that's an interesting way to take this data. You know, this is really looking at the economic numbers and market numbers, and what does that mean for our actual products. All right. Well, I think, Alicia, let's unless there's anybody else that comes in.
No, I think we're good to go. If anyone else has any questions, please be sure to leave your email and we will follow up with you all. Otherwise, thank you guys so much for joining us today. We will have this presentation and the recording of this webinar available to you by tomorrow via email, and you can access it on glass.org/webinars. Thank you all for joining us, and I hope everyone has a great rest of their day.
Thanks,
Thank you.
Alicia. Thanks all.
Bye.
Bye.